welcome to Greatness. My name is Realtor Mehrooz. In the last decade, our company helped so many people just like you get the key to their dream home. Welcome to Modern Choice Financial Podcast, where we talk about anything you need to know about financial to make better financial decisions in life. Today's episode is a very special episode. We have a special guest. She's almost like my mentor. I love her knowledge and her dedication to the industry. This topic is loaded with all kinds of information. It's so in depth that we can't even keep it in one episode. We're probably going to segment it into many future episodes. Today is just the introduction to this topic, so our audience is going to be ready for the future segment of this specific topic. We're going to talk about anything you need to know about how to plan for your retirement, how to have a financial vehicle in place to be successful for your future and your family's future. With that being said, Loida is here. She's with the same company with me in Exertus Financial. And if you Google Exertus Financial, you understand that this company is set up for helping everyone, regardless of their age, to plan better for their financial future. With that being said, here you go, Loida. Please introduce yourself and let our client know more about yourself.
Well, first of all, Mehrooz, thank you so much for inviting me here. It's a privilege to be able to be a guest, at this podcast that you have. And I am really excited because I know we've known each other for like 4 years now or more. And we work together under the banner of under the Exertus Financial Partners. And what makes me excited being with that company, Exertus Financial Partners, is that we had evolved in so many ways. And when it comes to the solutions or the products that you're talking about, we added solutions that we feel that can cater to everybody's needs when it comes to financial planning.
Definitely.
And so you may ask questions, but at the same time, I probably would just want to share, like you said, the basic information, what type of solutions we are offering, but not like any other agencies or IMO that you call, or independent marketing organization when it comes to life insurance. Exertus Financial Partners have its own exclusive brands. So our products have 7 exclusive brands under the Exertus logo. Okay, so I can talk about BYOB, or Build Your Own Bank, by Exertus, and that is also something that has to do with helping people. Not just the alternative banking, but also with the special feature that it has. It helps people to their plan when it comes to debt elimination. We have our own website or software where we can input people's data when it comes to creating or generating a debt action plan. Mm-hmm. So we customize it according to their needs. That's one beautiful aspect of that product. So we can talk about the details later on. We also have right now estate planning.
Estate planning,
the state
love
of the
that
art.
topic.
Yeah, state of the art. It's all done the way it is being done these days, so it is online. Mm-hmm. And a lot of times it's a lot harder, of course, to go to lawyer's office to be able to create your living trust and these things, even power of attorney. But that's all these things are being part of the package that the people can do in the comfort of their own home or their own time, so that they can really create their own legacy for their family. And the beauty of that also is that they have unlimited access. So again, that's getting me all excited when I talk about these products, because I love helping people, and that's what we're all about, So that's just one. But the other one is also, you talk about life insurance, you talk about retirement plan, but we have what we call the 770X.
Yes.
Okay, so under that will be different types of plans. So it could be, you could present it such as your tax-free retirement, it could be college funding, it could be your life insurance, your living benefit. It's all in that plan. Whatever the person or the individual or even the family needs, we have the solution. So these products here, we help people from 0 day old to 85 years old.
Wow.
And that's really what is so helpful to have also the companies that we represent for these products, because they're not just the companies out there, they're the highest
top tier
when it comes to ratings.
Yes.
When it comes to ranking, industry standard is this, but we're this one. So I have to say that gives us the confidence to be able to really provide the best services that we can offer to our clients.
Definitely. So I want to go over a little bit more in depth, but not too much, because it's going to be very overwhelming for big majority of our clientele.
Yeah, and I have more other products, so go ahead and ask questions. I have other
couple of things we're going to highlight today, and then in our future episodes we're going to dive more deeper in those products. There's a concept, and a lot of people throw it very vaguely out, and talks about be your own bank, or BYOB. Let's talk about that to a certain extent, and then we can just dedicate an entire episode. Matter of fact, I actually want to run the actual scenario in our future episodes, like a real life scenario. Okay, if this is your credit card debt, and this is your car payment, your let's say mortgage payment and all that, what can you do to eliminate those debts quicker?
Well, that's really a good question, Mehrooz, because if I may say so, BYOB, or Building Your Own Bank, is really my favorite product at this time, helping families being able to eliminate their debts. Yes, because we don't have a one size fits all type of solution to people. We sit down with them on their table, and we customize it. We ask questions so that we can help them based on their needs, on that particular need or solution, and so that they can plan ahead. So could you imagine when they come up with some of their debts? There's credit cards, there's car payments, there's probably student loans, and there's also the big ones, which is mortgage loan. When we do the presentation using the software, it's a proprietary software by Exertus, when we input their actual data, for example, how much do they owe, the principal, the interest rate, the monthly payment, boils down to, let's say, for example, a newly purchased mortgage, or a real estate property, and 30 years to pay.
Yes.
Nowadays, 6-7% of interest rate, that's big, right? And what a lot of people they do, so that they will save on the interest, is they pay extra.
Yes.
They overpay. When they have refund, like tax season's coming up, they put more money there. But what we show to them is the same money that you have now, the same money that you probably are setting aside or overpaying this type of credits or loans. If we put it in this plan, you probably can eliminate those debts or pay off those debts in half the time or less with that same amount of money. So when we say that, they say, well, how? It's not even possible. So I said, well, let's see if it works. So they list down what they have, like I mentioned earlier, and I put it in the system, and there, we'll be able to generate a report. Hey, instead of 30 years, would you like to see that it's saying now that this can be paid in 12 years? And you don't have to pay extra. You don't have to really work another job to be able to do this. And that's amazing. Some families, they get emotional when I show it to them, and a lot of times, in the beginning, they think like, oh, that's another expense. I don't know if I can afford that, I don't think I'm interested or whatever. But almost all the time, Mehrooz, when I do the presentation, it's more of talking to them and showing to them what it can do for them. They get emotional. And a lot of times, and most of the time really for me, what if I put more?
Yes,
you see, because
definitely.
they understand the concept.
Yeah, once that aha moment comes, I guess, once people get to that aha moment and they're like, oh my God, this makes sense. Now I understand the value to it or how it can help you. Because a lot of people, almost, I would say, 99% of these products, they fall under life insurance code because of that IRS code that is embedded in life insurance products. So it's like tax free. So when you're utilizing those products to get money out, it becomes tax-free product. So because of that, they're utilizing life insurance, and a lot of people, or I would say a lot of cultures, they just don't even want to think about life insurance, because the moment they think about life insurance, they think about death. But in reality, correct me if I'm wrong, a lot of times if you utilize the correct type of policy or a product under the life insurance umbrella, you can actually unlock what is called living insurance, living product, because you can really utilize it almost like a high interest saving account that pay you cash value during the time that you're still living, and you can actually utilize it as a money-making machine.
So going back to that exactly, and really, so going back to again to building your own bank concept, is that's what you have. People are so trained or so taught about the traditional way. Put your money in the bank, you pay your bills, you spend it, that's it. You say bye-bye to that money.
Yeah.
But the alternative way of doing it is having it in this plan that you have, and still you have the cash value accumulation, compounding interest. At the same time, you have access to that to that fund that you have there, just like a supercharged checking account. And the beauty of it is, and this is what a lot of people say, how can that be possible? They scratch their head, because when I say in the bank, if you have $10,000,
yes,
you take out 5,000, how much is left? 5,000, right?
Yep.
Not only that, you hardly make any money over there, but when you take out the 5,000, it's gone. But using that same $10,000, putting it in this plan here, you take out $5,000, you still have 10,000. That's going to keep making money uninterrupted. It's going to accumulate cash value and a big amount. Plus you have dividends.
I think here's the thing. This is where a lot of people get lost when I try to actually explain that for them. How's that possible?
Right.
Let's actually explain that, how it's possible, because technically the quick answer, I guess, would be sorry about that. If you utilize the money, taking it out of that policy, you're basically taking out of the cash value, or basically the final proceed of the policy. That's why your main money is still there. Let's have you explain it fully.
So there is the IRC code 770X. Again, this is a loan provision where people are, IRC code is the IRS allowing people to be able to have the growth in your account tax free. There's a certain percentage of that you are allowed out of your income, right? When it comes to liquidity, when it comes to you being able to access that, so you're not necessarily touching or withdrawing the money. There is a pool of money that in the general account by the company, and like I mentioned earlier, there's a big companies, right? So they have their general account where when you need money, let's say for instance you have that 10,000, let's just use that as an example, and you need the 5,000. So you're not really literally withdrawing that 5,000. They let you borrow it from that general fund because they know you have it, and your collateral is your death benefit.
Exactly.
And death benefit now, if you have 100,000 there, minus the 5,000 is 95. Okay, so you have the option of paying it back, or you don't have to. If anything happens to you, beneficiary will get.
This is the most important part I want you guys to understand. Once you understand that, this will be like a no-brainer for anyone to have that aha moment of, oh my God, I've been missing out all this time, and then nobody took the time to properly explain that as far as how it works. Here's simplified version, right? You put money in this product, and the money that you put in is there accumulating interest. Okay, and we're going to talk about rule of 72, and you guys can actually Google it yourself, but we're going to have Loida go over that really quick. But thanks to our boy Google, everything is simplified these days. You just Google rule of 72, accumulating money. It will explain everything for you. There's probably hundreds of videos out there explaining that. But the whole point is your money never leaves that, let's say, high interest paying cash account. Your money's there. What you actually get as in money going out is almost like borrowing against your death benefit.
Exactly.
So like your death benefit is, let's say, 500,000, you borrow 50,000, now your death benefit is 450,000. That's it. Your money is still in the account. You still have cash value. We're going to talk about that terminology, exactly what that means. Pretty much as your money grows in the policy, your money is still there. The interest that your money gains is still there. It's accumulating. And now whenever you want, after a couple of years, you have full access to withdraw that if you want to, which no smart people would withdraw money because that money is where actually goes to work for you. So let's talk about rule of 72.
The rule of 72, this is the formula that, according to Albert Einstein, is the eighth wonder of the world.
Yep.
You know, he went to big board there and put all these numbers and how he was able to come up with. But his conclusion with that is whoever understands it will earn.
Yep.
But whoever doesn't understand will be paying. Okay,
Yep.
so when it comes to rule of 72, that's the formula that the bank uses. They are able to foresee, or they're able to calculate ahead of time how much a certain amount of money will make a certain, so how many times it's going to double based on the interest rate that they're going to offer.
Yep.
In other words, if it's 1%, you have $10,000 there, guess what? How many years is that going to double, right?
Yep.
Okay, so 72 years. And it's going to be 20,000 in 72 years. But who's got 72 years? Only once in a lifetime, right?
Yeah.
So we're looking for options or opportunities where we can leverage our money,
Yep.
where we can actually be able to make that money works for us. And that is also the benefit of having build your own bank, because you're going to be able to control your own finances. Okay, because having your money in the bank, they can also leverage it like up to 7 times. Not only that, probably, I'll give you an example. You put money in there. I'm going to use again the $10,000. Guess what? There's already somebody that's ready to borrow that money.
Mm-hmm.
And maybe you're going to get, let's just call it 1%. But they're probably going to loan it to someone for what, 10%. Okay, or more. You know, I'm being conservative and being also generous here, but we know how it is right now with the rates out there. So, you know, sometimes when you have that money there, you want to use it. You're going to need to access your money, and they say, well, we're going to have to wait 5 days or whatever,
Mm-hmm.
right, for that. And what did you make? If you have 100,000, good, $16 maybe.
Yeah.
And then pay 30% of that in taxes. Could you imagine? So when you have build your own bank, BYOB product, you will have all this growth tax-free.
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 Can't go wrong with that.
Tax-free. Okay, so always remember, tax-free. That's what a lot of people are worried about, especially those people that have higher income. We're talking about lawyers, doctors, and business owners even. That's another product. We have that, by the way, where they pay taxes every year. You know, I feel bad for all those hardworking people, like the nurses, like they work 2-3 jobs, and they are so happy and so dedicated helping people. But at the end of the day, you know, they're so tired and everything, but they look at their money, oh wow, there's a lot of taxes that I have to pay. Yes, maybe they had set aside some money, but that type of retirement is going to have all kinds of penalty. It's not accessible. Plus, it's gonna be charging you a lot of taxes because the growth of that money is gonna accumulate taxes. Okay.
Yes. So speaking of that, this just happened last year to my mom. Actually, 2 years ago. Time flies. So she had to change her employer, and previous employer she worked about 11 years. So they were giving her 401k.
Yes. Okay.
And it's not a bad thing to have. It's actually, especially when some employers match, right? It's kind of like considered free money. But at the same time, because it rides with the market and economy, if economy is not doing well, like when we start experiencing the second quarter of 2022, almost like 2 years ago, we're already in end of 2023. So right around that time, people are start noticing it. A lot of people really noticed it back in 2008 crash. I have a friend that is actually happened to be in the same business, in life and financial business, and because of this actually, she used to work for Mutual of Omaha, where it was I guess bought out with Chase, I believe, right? Washington Mutual, whatever it was.
It was Washington Mutual.
Washington Mutual, yeah. So similar words. So at the time when they got bought out with Chase, they got let go, and she wasn't quick enough to get her 401k out, and that was during the time that market was crashing, like in seconds and minutes and days, and if she would have cashed out right when she got let go, she had about $300-something thousand because she'd been there for almost 10 years. And unfortunately, by the time she realized what's going on and tried to go through the process to get her 401k out, it was down to like 130, like less than half. Why? Because it rides with the market. So I remember that as in like live and learn and try to learn from other people's basically experiences.
Right.
So when my mom happened to change employer, we happened to basically know about BYOB, and we put roughly about $40,000 as in first initial payment, and obviously about like I guess we're paying about $400 a month. But I know that money, the beauty of that is it's never going to lose value.
Yes.
So there is this term in this industry called zero is your hero.
Correct.
Right? Reason why zero is your hero is your money never diminish like how it can be in 401k. And the reason why is these products are pretty much have that almost guaranteed basically that you never lose money. You might in some bad time of economy don't make as much money, but you're never going to lose money. That's the huge deal to me, So you want to piggyback on that?
So I have to say these are some of the secrets of the wealthy people.
Exactly.
Why are the rich people getting richer and richer, and the poor are getting poorer? Or we work so hard and yet we don't go up there as rich people. It's because there are things that are allowed, and one of that is, like I said, the IRC code and other IRC codes out there that are available to us so that we can save on taxes. And taxes is big. When I have this client, and this was just today, 31 years old, this is another example, 31 years old, putting money in 401k, and then because that has a limit, and so he wants to put another one, so he's got Roth IRA. And right now, currently, I think Roth IRA is only limited to $7,000 a year.
Oh, wow.
401k is $22,000. It's going to increase probably a little bit in 2024, and for Roth IRA will be increasing to $7,500. But even so, even if you're working, like let's say this 31-year-old guy, when he comes to 65 years old and ready to retire, how much is that? So when I told him today that you are able to put money away in your retirement plan, that you can put as much as you want, there's no limit. you know, and he said, how does that work? So I gave him this illustration, and pretty much what he's doing now, which is the 7,000 a year, is equivalent to like 585 a month. He said, let me go ahead and set that aside. So I said, okay, so this is what I'm gonna do to you. You're going to go ahead and put 585 a month, and let's see what happens. You pay up to 65 years old. This is tax-free retirement, 770X product, okay?
Oh, wow. Okay.
So I said 65 years old, let me see how much you already have invested there. 237,000. If you put that in the bank, that's what you have, right?
Yep.
But look what happened. I said, you actually have, it was set up or structured so that he will be able to borrow or withdraw from that fund from 66 years old up to 85. So that's 20 years, and that's almost 67,000 a year.
Oh, wow.
Could you imagine? Do the math. 67,000 up to times 20 years is 1.3 million more than. He only invested 237.
Wow.
That is the magic, and math is numbers don't
lie. Yes, for sure.
So if you have people like that, if you are able to make them understand this concept, this products, these services, they're gonna want to refer you to people. They're gonna want to understand, well, how is that possible? And then of course, having again the companies that we are representing, your confidence out there is really truly up there, and you always want to go. I mean, you always go home smiling, being able to
help
to
people.
do the best.
Yes.
Yeah, that you can.
So as you know, in our office, we do 3 different services: mortgage, real estate, insurance, and soon, once all the legal paperworks are done, hopefully by next year, we're going to do tax as well. The goal was to be able to create almost like a community around us. I don't look at my clients like just clients. They're just a client. Most of my clients are my very close friends, that they're referring their friends and family and whoever they care about to us, because we try to do our best to go above and beyond and keep them happy. With that being said, I've been thinking about almost like a slogan for my real estate side, and I wanted to kind of like run it by our company on Exertis to see maybe if you think it makes sense, I actually run it that way, and that will be our 2024 slogan for Modern Choice Realty.
Wow.
So you've been doing a lot of this BYOB, be your own bank, right?
Yes.
And do you think is it safe for us to say, let's say if you purchase your property with us, right? We can help you to pay off your 30 years loan in, let's say, less than 15 years without paying anything extra? Would you think it's safe to say? If they use this product?
That's very, very possible. Okay, its family, its individual situation is different.
Yes.
Okay, so we don't want to guarantee anything until we see their numbers.
Of course.
But it is very possible.
Definitely.
And that's why I always salute you and tell you, Mehrooz, that I admire what you're doing with your business here, because you have this real estate people. I mean, this real estate agency or brokerage that you have, and so you have captured that market, the clientele that you already have.
Mm-hmm.
The next thing that they need is to actually
securing their biggest investment, basically.
Be able to pay it off a lot sooner, be able to enjoy their investment with less interest rate that they have to pay. And securing means the estate planning, the living trust. Do you know that when you have a living trust, so let me rephrase that. If you don't have a living trust, that your property, if anything happens to you, goes to probate.
Yeah. We actually had an entire episode, matter of fact, we had an entire episode about probate, and if you guys been following, great. If you just start following our channel, please go back to probably 2 or 3 episodes ago and watch that entire episode. We brought one of the really experienced probate attorney in town, Mickey, and we asked him all kinds of questions, and we probably need to invite him again because there are still some questions that we just run out of time because he was supposed to be at the dinner. So long story short, let's just take our advice. You don't want to go through probate, and you want to avoid it at all cost possible, because this is going to be losing time, nerve, and money, and not getting what you're really entitled to as an heir because of not doing the right thing in advance.
Yeah.
Correct?
Exactly. And so it's basically, Mehrooz, what you're doing and what we're doing here is educating people, because a lot of the things that are being taught is not bad, but it's the traditional way. And again, there's other options. So sharing with them this information, helping them to see that there are other options, possibilities out there that can help them, and especially with the planning, future planning. And it's all under the solutions that we talked about. We haven't even touched what we call the Infinity X, that's income for life, that's tax-free income for life, the pension for the business owners, so many.
Yes.
So I guess by next time,
exactly,
we can
honestly, I want to get the promise in front of our audience from you that since you're local here, even though you're spending probably 60% of your time in California, since that's where you originally, I guess, came from, right? I would love to have you at least once a month, so we can rotate and continue this series of life and retirement, and we dedicate like the future episodes for like product driven. Like today we're going to only talk about, let's say, how to mortgage protection, what that means, how it works, and how you can set it up. Next time we're going to talk about, let's say you have a kid that you want to send to college. Now they're, let's say, 6 years old, right? Do you think by the time they're, let's say, 18, you really have $200,000 or $300,000 to send them to law school, whatever you want to send them to? But setting up a plan with a very minimal payment per month, maybe like $50 a month or whatever it would be for a juvenile, whatever, you can probably have a very good plan in place within next 10 years to have that ready. There's all kinds of different programs that we can offer in this arena. We just need to talk about it, and as you mentioned earlier, we just create the awareness of what's available out there and how it can literally change people's life and utilize
literally
it.
And so I feel like I'm being very passionate in what I do now because of those experiences of being able to help people and how I was able to make impact in their lives, literally in the aspect of life insurance, where I was able to help beneficiaries claim the check when their loved one passed away. So that's just the other.
Yeah, matter of fact, we always ask people to tell us, like, during the time that they've been in whatever business they are, one of their highlights of their experiences or their memories. I think I know which one will be for yours because you said it many, many times in different events that we've been together. But I would love to have it for our client regarding that family that
yeah, so it is very dear to me. It's very, very close to me because they are my friends, my coworkers, and family to me when I first moved here in Las Vegas. And I was very new in the industry and hardly knowing anything, but I was so willing to learn and so willing to help people. So this family of four, the husband, the wife, and two children that were in college, they all said, well, okay, based on the explanation I had, they got interested and they went ahead and applied, and we started the process. And part of the process, which is very basic, but yet the most important, is a medical exam.
Yes.
You have to go through your analysis, blood work, and all that kind of stuff, paramedical examinations. So they all passed. And they started, policy got approved, it got delivered, they started making the payments. 5 months later, the husband, or the father of the family, the breadwinner, got diagnosed with stage 4 pancreatic cancer. It was so devastating, of course. How do you deal with that? I, being an inexperienced agent, I didn't know what to do because we had offered to them a living benefit, meaning they can claim against the policy but they're still alive, and you use that for whatever reason, But this family right here, for us to be able to make that claim, I have to collect medical reports, doctor statements. So here I am to submit to the company the papers from the doctors. What is he diagnosed with? Pancreatic cancer, stage 4, that spread to the liver. Is he expected to die? Yes. When? 3 months. And I said every time, I wish I was sitting down when I was reading that, because I was so affected. I literally was in tears and I didn't know what to say. But I was able to experience a wonderful thing with that situation, because the promise that I did when I said, you're gonna get this amount of money if something happens, they literally was able to get that. The wife, the mother that was
Yes.
left with nothing. So you see what kind of feeling I got from that.
Of course. I think this is probably a best moment to highlight. Obviously, the company has a relationship with over 20 different life insurance companies that
Yes.
we can write different type of policies from final expense. We're going to talk about that and what it is and it kind of what it actually read, but there's more into it. All the way to like a short-term or term life insurance. We're going to explain all of that in detail, but here's the thing. Between all those companies, there's two companies that is technically, I would call it the flagship of Exertis, right? Which is Columbus Life and Lafayette. And probably over 60 to 70% of the different products that we offer is through them. Why? Because they have a huge backbone and the rating is great and they're owned by
Western and Southern.
Western and Southern.
It's been around since 1888.
So that right there, we know that they're not going anywhere. They're solid. They're humongous. Matter of fact, you can Google them, see where they are and what kind of building they have. And this is just a rock solid type of a company. It's not like they just form a LLC and hey, we're gonna sell people life insurance. This is like very strong companies that you know that if your client want to utilize them when the time comes, you're not gonna be called, hey, I call them and their customer service is.
And that was the proof right there. That family,
Yeah.
the very first family, they were actually my very first client. So could you imagine when I delivered to them that promise that they were able to really use, because now that the breadwinner is gone, it helped a lot. It helped a lot. So I gained business from that. But the most important thing is the integrity was there and the promise was made and we delivered that. And so that's how I started really wanting to do this. I dropped
Because-
everything. I want to do more.
Yeah. You want to talk about your story?
Do we still have time?
We have another probably 5 minutes. If we can wrap it up in 5 minutes.
Yeah. So being with this company, I didn't even know anything about insurance when I first started it. I was basically.
Make sure the mic is close to
Oh,
you.
sorry. I don't know if they can hear me better now.
Yeah, yes, better.
Okay, so I was in a different field entirely. I started my life at working for the government after college, county, federal, state, and so I was fine with that. But then I had to change fields, went to real estate property management. And I was doing good there. They were telling me, hey, why don't you do insurance? I go, insurance? I don't think it's for me. But make that story short, I lost the job. I was doing really good there. I lost it, and while I was waiting for another position as a general manager, I was driving Uber.
Okay.
I did.
And
I
things
did.
happen for a reason.
Yeah,
Imagine if you
so
wouldn't drive for
they-
Uber, you wouldn't meet the CEO, right?
The CEO of the company was one of my riders.
Wow.
Literally.
Well, that's crazy,
So
huh? How life
because they
just-
know also how to offer this product or the opportunity that
Definitely.
is. And I grabbed it. Not only that I grabbed it, I embraced it, I ran with it.
Now you're
And
one
I'm
of
an
the.
executive vice president of the company right now.
Right now, you're the role model for us. We want to be you.
Thank you. Thank you. But it's more of having the team, having the company to support, and also again backed up by all these different companies that gives me that confidence.
Definitely.
You know, and that's what I have to share. Long story short.
All right. Thank you for, sharing a lot of information. I know you probably fly like this within many of our audience, but we want to have a closing statement, whatever you think it's fair to say for people to have, like I would say, if this was your final message to the audience, what would it be? Put it that way.
Well, first of all, before I go there, you mentioned earlier about maybe once a month. I'm willing. Yeah, I would like to be able to again come back here, and thank you for that.
Yeah, that would be very helpful.
That would be really nice, and I will be sharing more.
Yeah, we're gonna plan it ahead. So we're gonna say, okay, because it's always on Wednesday at 6 p.m. So we're gonna say, for example, 2 Wednesday down the road, the topic going to be about, let's say, final expense, for example.
Mm-hmm.
If you don't know what it is, or you know but you're not sure, or you have one and you want to get kind of like more information about it, drop it in. If you guys are actually following our social medias, I try to make them all under the same username. They're all under Realtor Mehrooz. Even though I became a broker in real estate world, I kept it as Realtor Mehrooz because Realtor is more well-branded, I would say, logo. And we've been branded as Realtor Mehrooz in everywhere. So our Facebook, our Instagram, TikTok, I don't know, LinkedIn, even our YouTube channel is under Realtor Mehrooz, and we have a playlist under Realtor Mehrooz YouTube channel called Modern Choice Financial Podcast, where all these episodes are there. If you missed this, don't worry. By next Friday, it's going to be edited and ready and uploaded in our YouTube channel. But we're going to definitely let you guys know through our social media what the topic might be, and then you guys drop in your question. I'm make sure I factor in all those questions into the questions that I'm going to bring in. And this is going to be very informative and very helpful, hopefully, and hopefully our audience would like it and share it.
So I have to say, yeah, always be open to opportunity, and also when I say opportunity, gaining this type of knowledge, because it could be something that could be very helpful, be beneficial to them as individual. Knowledge is power.
Definitely.
First of all,
for sure.
But also when it comes to our health, it's wealth.
Yes.
But I wanted to say for the younger ones, plan ahead.
I love that.
There are actually solutions.
Let me repeat that. I love that. Our health is wealth.
Mm-hmm.
Love it. Go ahead.
And I wanted to say this last. A lot of people, they think that insurance or life insurance in particular is expensive.
Uh-huh.
But see what happens when you don't have it. In other words, I wanted to leave with this message. When people refuse to get insurance because they're healthy,
Mm-hmm.
guess what? Life insurance company refuse people when they are sick.
Yep, exactly. You can, this is generally about insurance,
Mm-hmm.
right? Even on your car, you don't wait until you get an accident, then go get insurance for it, right? You gotta get it while there's nothing wrong with it. And then if something happened, you have the proper coverage to do it. And the concept of insurance overall is a pool of money from everybody that are the client of this one company, regardless of whatever product it is, a home, auto, a motorcycle insurance, life insurance, whatever product it is, right? So everybody pitching in money to the pool of money, and then when the time comes for whoever to use it, that pot would help that person. Otherwise, imagine, let's say simple auto insurance, you pay probably $200 a month, right? You might think it's a lot, but in all reality, you cause a claim, the claim can be as high as $100,000, $200,000, depends how crazy that claim might be. Do you have the money to pay it? Probably not, right? But with utilizing the pool of money called insurance policy, you're able to do that because the company behind it structure that pool of money that comes from everybody else and be able to pay that claim. And that same way in life insurance, I think I would want to honestly change the concept of even wording of life insurance. I would rather always call it financial products because technically that's what they are. They are financial vehicles for people to utilize. They just need to know what's available. Unfortunately, a lot of people that they don't have financial advisor, they can't afford it, they never had it in their family. And both me and you, we're basically first generation immigrant. And a lot of people, especially people that, even people grow up in here, I talk to so many of them, they're like, what? I don't even know what you're talking about, right? A lot of people, they just don't have the luxury of having financial advisor to advise them about this kind of stuff. Going back to last presidential campaign when Trump was asked, hey, what did you do with your tax? How come you never pay tax? It's like, hey, this is a code that is available for everybody. Mm-hmm. You know, I love that segment. You know, it's like, this is available for everybody. I utilize it because I knew it. I had people that guide me to use it. It's available for everybody. Exactly. You can use it too. Exactly. And he's right. I mean, that's when everybody start to, you know, thinking like, this guy is really like, that's it. That's what it is. It's there. We just didn't know about it.
Correct.
You know?
It's not because the rich people have a different set of rules. It's because we did not have that capability to maybe learning those rules, but now that we do and we are spreading that, you know, people are being aware.
Exactly.
Know? But when you say life insurance, I actually call it love insurance, you know, because you love your family, you love the people. You always want to think, let's say for that head of the family that my client, he was the breadwinner, you know, he thinks about the future of what if something happens to me, what's going to happen to my family. So that's the love insurance.
Exactly.
And lastly, I want to say that particular example right there, he got diagnosed in 5 months, he died 3 months later, so that's just 8 months from the time that he got approved. You know how much they had paid or invested if they just put that money in the bank? $1,600.
Entire time, because they were paying $200 a month, 8 months, that's $1,600.
Yeah, it was a little big because the coverage is $250, but guess what kind of return on investment? You pay $1,600, something happened to you, family got $250,000.
They could have paid off their house. At least they won't be in the street because the breadwinner that was making the money. Here's the way I look at it, honestly. You know, I want to cut this short, but honestly, this topic is so important. I feel like a lot of people need to get better education about this. So let's think about it. I'm in real estate, mortgage, insurance, right? My client buy a home, and I would say 50% of my clients buy a home as in like husband and wife, boyfriend, girlfriend, or father and son, whatever, right? 2 people. What that means is they got qualified for that mortgage with 2 income. That means without the second person, whoever might be, that mortgage wouldn't even be qualified.
Correct.
Or they couldn't afford to buy the house, right? So now something happened, let's say call it life happened, and the second person is not in the picture anymore. Now, not only they lost the person, the loved one in the family, they lost the income of that person with it.
Yeah.
Right? So guess what's going to happen? This is a story of a lot of people's life, and it just turns around just like this. And now not only they lost that person, the income of that person is gone, but if that particular person had a little bit better knowledge about what's available out there with very minimum payment, like $100, $150, let's say even $200 a month, they could have secured a very good policy for them. So at least if the family is suffering their, basically, you know, their lack of word. What was that word? Their, that person being gone.
They died.
Right?
They passed away.
Exactly. they're not suffering, at least financially, after that too. The after effect of it is even more.
And my client is the perfect example again, because this particular family, they lost their house way back 2008, 2009 when the real estate collapsed, right?
Yep.
So they heard they were renting, and they're trying so hard to save some money to get another house or buy another property, but this made it happen.
Yeah.
They were able, literally, the widow. The three kids were able to get their house.
Wow.
And then BYOB came, and then the daughter and the other son is now also working. They're already out of college. Guess what? I showed them how you can pay off this house, because $250 was not enough. It was a $400,000. So they used that, and they got some appliances and a new car and all that. So they call that their dad's whatever love for them.
Yes.
So to have a BYOB and be able to show to them that instead of 30 years, you'll be able to pay it in 12 years.
I want to actually prove this eventually in a couple of live sessions. And then once it's proven, then I'm going to have this slogan for our company: buy your property with us and we help you to pay it off in less than 15 years.
Yep.
How about that?
And that's possible. Perfect.
With that being said, thank you guys for following our podcast. If you think the materials are helpful, please share the love. It's free. Just hit the share button. Doesn't cost you any money. Make sure you share it with your friends and family and whoever you think you care the most. Especially episodes like this. I feel like it's extremely informative and helpful for a lot of people to know and clear their doubts. And if you have any question, ask us in the comment section wherever you see these videos, and we make sure in the future episodes, since Loida just promised us she's going to be here back again at least once a month, we're going to segment this. Each future episodes with Loida is going to be about a specific product. We're going to let you guys know in advance, and we can answer all your questions that way. With that being said, thank you for coming. Thank you for your time. I know you have a very busy schedule. You're back and forth between here and California. Thank you for...
And probably Arizona. I'm expanding in Arizona.
Oh, wow. Look at you. See, I told you I want to be you when I grow up.
Right.
Other than that, thank you guys for being great audience, great clients, great friends. See you guys in future episodes. With that being said, ciao.